This region around the Great Lakes has been called a heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, February 5th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down 3/4 at 428 3/4. March soybeans were up 10 1/4 at 1102 1/2, and March Chicago wheat was up 1/4 at 527. This morning we got weekly export sales. Really nothing spectacular across the board. Corn 1,041,200 for old crop. They were looking for a number between 800 and 2.1 million. So we're kind of lower end of the estimates there. Sold a little bit of new crop, 16,400 on the soybean side. Also towards the lower end of the range, 436,900. Nothing sold for new crop. Wheat, low end, 373,900. Low end of the range was looking for 300 there. Meal, right in the middle, 380,300. And we saw a little bit of oil, 1,000 there. As we kick it off here this morning, guys, I guess the big news yesterday, the True Social post from President Trump illustrating that China's considering additional bean purchases. Nothing from China with regard to that statement, but it did certainly get the bean market going pretty good. We saw a little bit of follow through, certainly in the front end of the market overnight. So I guess, Dustin, why don't you kick us off with a few thoughts here based on what happened yesterday, the action we saw, and then we'll throw it around the room.
Yeah, thanks, Dan. Good morning. I think, the Truth Social post by Trump, maybe another 8 million metric tons of beans, for this marketing year going to China. I think there's a lot of people that don't really know what that means because it took so long for China to get up to this number, right? A lot of people actually kind of downplayed the chances that they would do this because of how slow they were. So I think that's the initial reaction is like, what does it really mean? But we have to keep in mind how strong the domestic demand has been up to this point. No foreign feedstock. And if these are still small things dollar-wise for a much bigger trade agreement that's happening between the U.S. and China, think phase one trade deal, we can get much bigger disruptions in our markets just from small things like this. So I'm not surprised by the move, and now we're breaking through again on the upside. I just want to show the domestic crush over the last couple of years. So this is our first 4 months of this marketing year. Our purple lines here are running around anywhere from 9 to 6% above the previous all-time record. And that's just our raised capacity for domestic crush. So if we were to trend out another, let's just say same sales pace as last year, China minus what they bought last year, and we just trended out another 5% increase above the last year for all of those months, we're going to probably end up somewhere near a 200 million bushel carryout, which is a rationing number. So like something can change or China does not follow through with this. A lot of things that, bull and bears both have good cases here. So we still have to compete with South America's huge production that's coming. But we are likely to run a much tighter carryout if they fulfill this number. So I think the market's reaction's appropriate. And I think it just puts extra emphasis on this chart going into the next couple of crush reports.
Very good. Justin, what's your thoughts?
Sorry, I had to unmute myself. Yesterday was the most volume that's ever traded in soybeans. So I think that's pretty telling in itself there. So massive change of ownership, I'm sure, attitude, all those kinds of things. So, yeah, sometimes you have a big spike higher and it sells off. Usually the market tries to go, it went there for a reason. So my guess is we go and test those highs we made yesterday and probably take them out. We've talked about this a lot on the show, just kind of the complacency, these massive moves. I mean, silver, the silver range again last night was massive. We're seeing these massive moves in the outside markets. We talked about how low volatility got in the grains, and it was ripe for something. So, is this the spark that kind of changes, things in the bean complex? Maybe, to Dustin's point, it's hard, right? You don't know, he says these things, China's never going to confirm it, right? We'll just have to see if they actually buy it or not. So far they have done what the administration said they're going to do. So I think it's hard just to say they're not going to do it. I've also seen a lot of charts about, well, even if they buy 20, it's not as much as they were buying, 5 years ago. It's really irrelevant because the rest of the world's bought, a decent amount from us during this time frame. So now if they were to switch and hit 20 million tons, it is a big deal. So I think, throw that kind of news out in the garbage. The one thing I am concerned about is, and this isn't really relevant for right now, but, do they, then be more favorable, to the petroleum industry and not pass aggressive biofuel policy? So when Dustin's showing those, record crush numbers, which is good, and we've talked about a lot here, is that's, we need to find more domestic use and not have to rely on these deals with China, because ultimately these are band-aids. Like it could create a bull market this year. It could do all sorts of nice things in the short run, which we need. But if we don't, ramp up biofuels or domestic usage, you can't ignore the fact that South America continues to grow and China continues to consume about the same amount. So I don't know. This isn't a long-term fix, making China buy X amount of beans. That doesn't mean, like I said, doesn't mean it's not friendly or not bullish in the short run, but medium to long term, I don't, I'm hoping that we also ramp up biofuels and do some good policies there so that we don't have to rely on a short-term trade deal.
Right. That's not really economically driven, but rather just politically driven. That's not a long-term, not a safe bet.
Exactly. Right.
Yeah, that's a great point. Ben, what's on your mind this morning?
Yeah, I think this is going back to conversations that we've had for months, and I think Justin used the word imbalance. And hopefully the bean news materializes and we see more balance in our crops, where we get away from one that's grossly oversupplied, that has unbelievable demand, and one that got shafted on production from acres and didn't have any demand. So, I think that imbalance hurt us this year probably more than anything. And the second thing was, I had a conversation with a client yesterday, and he asked a question that I think a lot of people are asking themselves. And the question was, how do you even trade a market when a tweet can drive a market, 50 cents higher? And I think if you go back to the matrix, you go back to the basics, you might switch up a little bit on how you consider marketing that product. If we were to get something similar in corn as well, like if it's something that can potentially really change the dynamics of the market, I think you have to explore other ways to market it. It doesn't mean you don't market it. So I thought that was a really good question on his part, and I'm sure it's something that people are thinking about. And just how you approach it, if you think it could be a 2014 type of year. So, that's really on my mind. Really disappointed with corn performance. Traded text with Justin after that, and he used an old trader saying that he learned early on, and I thought it was good to share. And yesterday was definitely, resembled that same situation, which is you can't buy your beans in the corn pit. And corn was just a dog, considering at one point we had beans up 48, 50 cents and corn was up 4 and gave it all back by the end of the day. So I still think there's a little bit of a cloud on corn here. But we got to get through what we talked about, which is that last half of the month and whatever that purge may look like.
Yeah, I mean, just to that point, Ben. Oh, sorry. Sorry. To that point, I think the best thing for corn would be if, China did buy the beans, right? Because now you start looking at new crop corn. The acreage conversation comes back into play. So I think, it didn't surprise me, to that comment that, corn's up 4. It's like, well, you're buying corn because they might buy beans. Like that doesn't help the old crop corn supply, and they tried to bull spread corn. I mean, all those kind of things, I just don't think are going to work. I think it's the best thing that could happen is people get excited about planting new crop beans, and corn has to try to, keep acres.
Yeah.
So to me,
What is that? Where's that number where it really becomes a question? Because I had this conversation with 2 clients yesterday. Just curious what you guys think. Where's that number where it gets to where a guy has to really look hard at beans?
So before you say something, Justin, real quick, I alluded or forgot to admitted the spring crop insurance prices. So beans popped 4 cents yesterday. It's 10.81 now for the average for Feb. Corn stayed unchanged at 4.56. So now let's have that discussion.
Yeah. So, historically 2.5 to 2.6 ratio, meaning the price of beans is 2.5 to 2.6 times the price of corn. That I think it switches easier here. So I would say, in my opinion, like 2.4 and above. The reason being is that we had such a large number of acres of corn this year. So there's a natural rotation that wants to happen. The only way to make it not switch back would be like a 2.2 or 2.1, like a really low ratio. So if you were to get, excited, let's say a 2.5 or 2.6, I think you're talking 6-7 million more acres that would switch back if you were to get up to those kind of levels. A, because the price of the ratio, and B, because the price of corn the price to grow corn is so expensive. And we know that, talking to bankers, there's a cash crunch out there. So if you got excitement as well in beans, meaning that producers think there's an optimistic outlook. A lot of times producers grow not necessarily what the price is, but what they think the price is going to be. So I think there's several combinations that attribute that. If we were to get a bullish bean reaction in the month of February, I think you'd have quite a bit of acre switch personally.
If I could show a chart too, this is a little confusing chart, but this is the projected profitability of corn and soybeans using farm docs numbers, right? Just the raw numbers. And I'm taking futures prices only. So soybeans are in orange, corn's in blue. And then your net profitability at a zero basis is the green number, right? Which is about a $45 an acre loss on net. And so that's just taking their Central Illinois high productivity ground cost structures that they've recently published. You can go to Farm Doc, to see those numbers. The thing is, I find interesting here is look at beans. Beans are actually showing profitability right now in their numbers. That's not what we're hearing directly from our growers in the region, is that they'd rather plant corn. So there's a dislodge here, I think, of the perception of yield, what you can get for yield for beans versus what you can get for yield for corn. And I think just the confidence on yield is there for corn. And that's the big thing, Ben, to your question, that I think surprised us and me last year. That we had the most number of corn acres since 1936. That's really a strong feeling. The yield confidence is what's driving a lot of these things. And I think the insurance subsidies may also be driving some of this decision too, that we really haven't identified yet, because we're just getting into these new territories of insurance subsidies to see what the impact is on acreage decisions. So I agree with you, Justin, like 2.4, but I also I think it's like you need a mentality change. If people think that China may not be there next year, they're naturally drawn to corn. That's my experience. And so it may be that we need a $12 bean price to print and like clear signs that China is kind of in the market for our beans to get people excited and confident to go plant them.
Yeah, no, 100%. And I think also it matters how you get to the ratio. Meaning if the price is down and the ratio is high, like if you get, let's say, cheap corn, like cheaper corn and bean prices, but the ratio is at 2.4, I think that's a big difference because now you're below PLC prices. You've got all crop insurance. If it does it by beans rallying, I think that's a different story. To your point, if you have, $12 beans and, $4 corn or, $4.50 corn, that's the difference between, $4 corn and, $10 beans. So it depends how you get to the ratio. I totally agree. And I think the mentality, like we've seen people, years where people plant because, like, I'll give an example, like the ethanol years when we came out these giant mandates in 2006, but you could see a clear path of the next 5 years. And it was obvious that we had to find, 1 billion bushels of corn a year for 5 years, even though the price of corn was not that high yet. People continue to plant record amount of corn because they knew the demand was there. So there definitely is, multiple layers to this.
Oh, very good, guys. That's a good discussion there. Ryland, real quick, it doesn't matter what we did yesterday. We just opened the cattle market down sharply lower in feeders. Fats also off pretty good. Why don't you give us a little insight here today?
Yeah, it was a really good performance yesterday early, new highs for the move. Obviously, everybody's still kind of targeting the gaps in the cattle market, but some rumors yesterday that JBS workers for Greeley, Colorado voted for authorization to strike. So I think everybody kind of panicked on that. I don't really know exactly when that's supposed to happen, but I think obviously the headline's getting picked up here on the board. So I would imagine that maybe we got a little bit ahead of ourselves here, just trading limit down here right off the bat. But I mean, beef prices did slip a little bit yesterday. Obviously, we haven't seen much cash here, but bids yesterday at the SC was 237 and a half. Asking prices around 242 to 243. So I think overall, still looking for kind of steady-ish, kind of firmer trade, kind of depending on what the board does today. So hopefully we can kind of claw back some of these just kind of initial scary losses to start here. And then on the hog side of things, followed the cattle market pretty closely as well. Just kind of rallied up to a new contract high and then completely reversed course. So I think just overall, it's been a really good run. We're definitely due for some kind of a correction. The market's just been straight up. It's really held this nice kind of move. But obviously, we're going to generate some sell pressure here, maybe a little bit of profit taking. Bellies pretty much took off everything they put on, and I think that was kind of the driving force for why we just kind of reversed yesterday. Bellies ended up being down almost $20. Carcass was down sharply at $4.37 at 93. So we are starting to see just a little bit of cracks in fundamentals. Maybe prices need to kind of back off a little bit, generate a little bit further demand. But overall, I mean, it just seems like the story in hogs is just more disease concerns, manage money, just dogpiling in. So overall, just, these are great hedging prices. I put out some in the commentary, just a couple ideas for guys that really just want to get something locked in, both cattle and hogs yesterday. Just, I think these, now that we're back up to these in relatively high levels at such an early point in the year, I think it's a good thing to look at. So just definitely consider it. Obviously, everybody's getting beat up on the short side of these markets, so we like to kind of keep our risk defined, as it were. So we'll see what happens.
Very good, very good. We're about $5 off of the low here in feeders, so it's already been a wild morning.
You're welcome.
I mean, holy cow! If we stay on longer.
Silver, talking about just silver broke 18% in 2 hours last night.
Yeah.
And that's like a $2 bean move. I mean, just to put in perspective the moves that these things are having right now.
Yeah, down 13% right now, Justin, on the silver side.
Yeah.
Gold down 2.3%. So yeah, I mean, it's just every day is something like wackier and wackier, man. The money moving around. And before we wrap here, Justin, we talked about that too yesterday. That front end of beans being bought yesterday did feel like a huge money shift, right? If things were going to change, I mean, you just saw it. Really, the front end was the major leader.
Yeah, I mean, if you look at any contract, really, like I think March soybeans, the volume in March soybeans was 50% above the second highest volume day. November was like 3x the previous high. So just massive volume. So what does that mean? Is that a canary in a coal mine? How do you know? But you see all these kind of moves. You see money sloshing around. I think when you see low vol in any of these things, options become a really good thing to use. So, yeah, I think you have to be open-minded here. Like I think we've said, I want to see how this plays out. I think first notice day is still an issue for corn. And then after that, I think you kind of wipe the slate clean and see what you think.
Very good. We with that we'll get a quick readout here. March corn's down 3/4 at 428 3/4. March beans are up 8.5 right now, $11 3/4, and March Chicago wheat is down 3/4 at 526. Tomorrow's Friday, so be sure to tune in. We're gonna have Fun Fact Friday with Brian. Always an interesting segment, so be sure to tune in. Also, in the comment section, you'll see a link for the War Room Report. It's where we're putting out premium content, updating everybody at 7 o'clock in the morning, news, highlights, deeper dive into things we talk about in the War Room. So if you are a frequent War Room participant, check out the War Room Report. I think it's going to provide a lot of value for you. So also 10% of those subscription fees will go to support the AgYield Next Gen Foundation, supporting the next generation of ag leaders through our national scholarship competition. So that's also a really good, fun thing to check out. If you wouldn't mind, throw us a like and subscribe. We certainly appreciate everybody that tunes in every day. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield Next Gen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.